Hello and welcome to this very special edition of Market Guru. Joining me today here is Raamdeo Agrawal. Thanks very much, Raamdeo. It's always a pleasure talking to you. Mood seems to have turned even more grim than from the last time we spoke. The last few days, suddenly everybody is even more pessimistic. You've always known to be optimistic. Are you holding on or are you also slipping?
No. I mean, see, as far as the portfolio is concerned, you are holding on. Whatever little extra keeps coming because of dividend or something you have sold here and there. I think those are the cash which are sitting and you're looking for an opportunity. If one of your portfolio company breaks down in the market in terms of stock price or some new opportunity comes, which keeps coming every 2-3 months, 1 or 2 opportunities. So one is looking for a opportunity to buy in and even sell out if something goes wrong, So and a lot is happening in the marketplace. News flow is pretty disturbing. Disturbing because
you mean the global news flow?
No, global as well as local. You cannot shut your ears to any of the thing which is going to impact the corporate performance. So globally, say one of the thing which I was there in Omaha, I mean that Berkshire Hathaway AGM last week. So one of the thing which was coming up was that price of gas has come down so much in US, and they've got such prolific gas fields out there that it is 50s to 1. It has never happened in the history, and gas find is very, very big. So I think the energy scene is changing surely, where oil price has to pull down from current levels.
To some extent, we've started.
Yeah, we have seen that in last 10-15 days.
But we've not seen the end of it. That's the point.
So
heard that.
Yeah, so that gravity will pull it down, and we should have some patience. So I think what has happened, excesses which happened in last 10 years, some of that is getting corrected slowly. So a lot of things will change. Locally also, you have current account deficit, you have fiscal deficit, and on top of it now, third we are facing is BOP, balance of payment problem. And at the same time, government has decided to take on to FIs, FDI is closed in most of the sectors. So how do you handle this situation? So,
and you're still optimistic?
Yeah, because
after pointing out all of this to me, you're still optimistic.
Yeah, so because what has happened is in investing, the fun thing is that you are looking at the, one of the things Buffett said at this time is don't bother too much about the headlines, bother about the stocks. When he started buying in 1942, you can imagine what would have been the headlines. Second World War at full rage. Every day morning, Germany gone, this gone, that gone, bombarded this place. So, despite that, he went about buying stocks. So, buying stocks has not that much to do with the headlines. Yes, it does, emotions get impacted, but businesses are built for much longer period, not for 6 months or 1 year.
You don't believe that there is a structural problem as far as India is concerned? I hear a lot of foreigners now, investors talking about the fact that, it's no longer cyclical. There is a deep sense of structural issues that India needs to address. You don't believe that?
No, India needs to address always, India needed to address.
I'm not talking about cyclical, jo 2 saal mein it will change kind of a thing.
So, structure means, you need to liberalize the economy a lot more. And somebody has to take that action. And politics is coming on the way and see good governance. With the same set of laws, if Gujarat can grow at 14%, why other states in the center cannot grow? Same set of laws. So we are not talking about changing of the laws. It's the governance issue, good leadership issue. That's what comes to my mind. I'm not a big macroeconomist.
Sure.
So clearly we heard these things that India needs to structurally change. But I think more than structurally change, we need to really govern it better in the sense that proactive actions, you cannot sit on the issues whichever is lingering on for a very long time, allow the things to drift. Say now, food is rotting. 72 million tons of food grains are in stores. We should have disposed of much earlier, we should be able to see the problems. We should got to anticipate with the, it's a different size of the economy, different global economy, lot more linkages, it's very digital. So what has happened is economy two pieces. One is, which is very private, very global, digital and moving at full global speed. And second is one which is government controlled. You are waiting for the decisions to come from, coal mining. It's a prime source of energy. And for months and years, you are saying go, no go, this, that. Somehow you are not able to produce. So, the country has to move with an objective.
But despite all these headwinds, Raamdeo, you are saying that you still find value in many stocks and you're still buying? Because normally an investor, the way an investor would look at it is to say, everything seems to be wrong. The points that you make.
I understand.
I'm not trying to say there is no positives that are happening, but the mood seems to have become of a kind that everything is wrong, and the last thing we wanted was Europe, and now even that has happened, as in concerns. But are you saying that your bottom-up theory, which you've always, been a proponent of, you are even today seeing good value picks, and you're going and buying right now? Would you say that?
Yeah. So, the way it happens is that always you have two sets of news. One good and one bad. See, L&T result came yesterday.
Right.
They said they'll still get 80,000 crores worth of orders. They still declared 15% growth and good stable margins and all. It's a large company. You can't wish it away. It's not that companies collapsed or there is nothing happening and all. They are executing for somebody. Somebody is paying the bills. And they're saying we're still walking out of the orders, which is not meeting their terms. So, a lot of things are happening. But just that media has decided to report only one set of news, which is negative.
Well, you just mentioned so many negatives, Raamdeo.
There are negatives, but I know...
Don't just blame the media for it. These are all facts that you pointed out.
No, but you should also balance with good things happening. Which new factories are... How many two-wheeler plants have been announced? Yamaha has announced a new plant today. Suzuki has announced a new plant. Honda has gone and announced 3 plants. Hero is saying that they're setting up 2 more plants. Bajaj is saying 5, 6, 7 plants of global size, 2.5 million bikes. Where do you see it? Simultaneously coming up. So they are also reading something. They are not fools. So what I'm saying is there is something happening there.
You're saying that the investment cycle which had collapsed is reviving? Is that what you're saying?
No, it has not.
In some pockets?
Yeah, in some pockets. Wherever there is a demand, obviously the investment will come there. I mean, one is that you are at the top of the rate cycle. And most 2 times we have seen in last 10 years, rate cycles, they collapse in 18 to 20 months. I mean, in 2000, it was 11-12%, came down to 5% in next 2 years. In 7-8, when this Lehman crisis happened, we were at 9%. We collapsed to 4.5% in 18 months. Are we at the same level now? We are at 8.5%. In 18 months to 20 months, the growth slowdown will be so massive. I mean, we have seen March was minus 3.8, 3 point something. April and May will be definitely much lower.
Lower than that?
Much lower. Much lower. It could be, I don't know what with the base and all, but I know I'm talking to the guys in a lot of industries and all, they're saying that April, May is distinctly weaker. Now, what numbers will come, only time will tell. But what I'm saying is that now the slowdown will be so severe that authorities will have to take, kind of action in terms of losing the liquidity and losing the, cost of money. Maybe whatever is the short-term challenge in terms of you have rupee sliding very quickly. So, I mean, all these monetary authorities, they have to balance their act in such a way that liquidity is not dried up and yet the cost of money comes down. You know? So, I mean, these things will happen. But while this crisis is being managed, can you get some stocks which are, you understand very well and is available at your price? Because one thing you must understand very clearly, in this market, the quality stocks are not available at a good price. They are literally at all-time high.
The good quality stocks are at all-time high, you're saying?
Yes.
And that includes some of these frontliners, I don't want to get into names, which are at 52-week lows. But even then they're expensive, according to you.
I mean, I always avoided them and now they are come to this thing, low prices. But some of the terrific ideas will come from there also. Then there will be multi-baggers. Because if 100 has come to 20, when the 20 goes to 100, it's a 5 times. And the quality companies which are at all-time high can never match with that 5 times move.
In fact, we've seen some stocks in dollar terms even at 5-year lows.
Yeah. I mean, if this some corporates have to make a way out in the sense that they'll be decimated in the size or market profile or whatever. I mean, maybe they'll have to close down also because now these are market economies.
But you wouldn't trade this market?
I mean,
I'm not saying that you
trade means
trade
what
on
do you
a
mean by
daily
trade?
basis, but I'm talking from an investor's point of view. There are many who try to catch this volatility, try and catch for a quick term.
I'm not that
That's something you would not advocate at this point of time.
No, that's not my style.
No, I know. I'm not talking about you, but I'm saying if you were to guide and advise people, that would be your advice. That if you want to pick up these stocks, give them 2 to 3 years to clear,
obviously,
if not more.
Obviously, I mean maybe even longer. But at least 3 years is a must.
But you're buying at these levels.
Yeah, I'm buying and I'm willing to sell also if something goes wrong in my portfolio. So it's a very normal market, I would say.
Normal market.
Normal market is depressing in the sense that it's falling. Every day you get to see lower prices at below 5,000 index. So it's not a very, and more importantly, I'm also moved by what happens to the brokerages because my main cash flow comes from the brokerages, so which is not doing well.
And that's because retail interest seems to have totally dried out.
Withdrawal of the investors is total. So investor sentiment is very low, volumes are very low, which is justifiably so. And but our cost structure is very high.
Mutual funds aren't seeing inflows, insurance is seeing degrowth, retail direct equity investors are not coming in. Are we a market therefore which is purely FII and algorithmic trading driven?
Yeah, see what has happened is when market expanded between 2003 to 2008, authorities thought they extrapolated that same trend into the future and brought in regulations which curtailed the inflow of the money into insurance and mutual fund and all. They didn't know that market is in any case going to come to halt. And now market has come to a halt and those regulations are there in place, which doesn't allow the fresh money to get in. So now authorities must proactively, SEBI and all the authorities, they must proactively remove the constraint which brings the money into the system. This thing, capital gains tax and the authorities, their attitude towards investors must change, because without equity, businesses, enterprising India would not go forward.
And with this over dependence on just FII money, 100 million, 200 million a day swings us around 400 points.
And they are not about promoting, the true entrepreneurship. Because you want the guys who want $10 million, $20 million, $40 million to build the enterprise at the beginning, and that money has to be local.
Let me come to something that you mentioned last time when we spoke, Raamdeo. You said clearly valuations, this was January, you said valuations were at very low levels prior to that, that's last year. You said it had reached like 54 to 55% market cap to GDP, which is very low. In 2008 crisis, it went to about 50% to GDP. Right now, after the recovery, it is 60%. What, according to you, is it right now? This was in January when you said right now after recovery it's 60%.
Market moved
we probably have slipped back to square one, right? At levels
but GDP itself is now higher. So now we are looking at 12-13 GDP of 100 trillion rupees, which was say 90 last year. So 102 trillion rupees. So and our market cap is more like 62-63 lakh crores. So we're still at 60%, 62% to the GDP.
And that's a comfortable level according to you.
It's clearly comfortable. So valuation is per se on the broad market, valuation is not an issue. If you do 1200 rupees EPS for Sensex and you're at about 16,000, you are about 13 times and falling. So
you said last time 2012-13 your analysts are sticking to around 1250 EPS. So is that a number you've paired?
That's little paired, maybe 1225, 1230. Still it is 4 quarters away and a lot of things are happening. Interest rates will change, global economy is slowing down, export is slowing down, but I think we must not undermine the power of weakened currency for a lot of domestic companies.
Please explain that to me, because there seems to be this contrary view also emerging, saying that it's not as if it's all bad if this rupee slipped.
So yesterday I did a screen where I asked the largest net exporting countries, net exporting companies. So of course on the top was TCS, Infosys, Wipro, 24,000, 17,000, 8,000 crores of. Now these companies have a rupee based cost and a dollar based revenue. All the contracts are in dollars or whatever foreign currency equivalent. So clearly this 18-20% decline in the rupee dollar parity gives them a lot of breather in terms of what they get, how they translate in terms of their revenues. Even a lot of engineering companies like Bajaj Auto, I think they must be selling about almost $1 billion worth of motorcycles abroad at full global prices. Their cost structure is a lot more local, at least labor cost and a lot of inputs which go into the manufacturing. So the margin tends to expand for them. So gems and jewelry. So wherever this labor cost, which is much more rupee terms, is inputted into the products and services, they will definitely do very well. But what happens is that it takes little time for them to respond, go to the marketplace, offer them, become aggressive in exports, and then you start translating into the higher invoices. At the same time, imports become far more unreasonable. Say imported cars, even gold, which has been one of the source of troubles. Do
you believe that's a trouble which government should step in and curb now?
So clearly the current account deficit is to a large extent driven by gold imports of say $40 billion. So $40 billion is almost 2% of GDP. So if my current account deficit today, which is 4%, if it is 2%, I don't have any pressure on the rupee. So how do you make gold unattractive to the people who are bringing it without going through this Hawala routes and all, that will again bring back the old regime.
Right.
So I think even the fall in the global price of gold would make people, get disinterested in gold for some time. So a lot of things can change.
Let me come to a few sectors, Raamdeo. For example, FMCG, consumption. Again, you've been a great believer in it. Again, do you think valuations there have run up too much? I mean,
clearly. Some of the stocks have really run up.
Last checked, the top 3 have a market cap of 3,30,000 crore, total PAT of 9,000 crores. You're talking of 40 times.
So
that is ridiculously expensive.
It is expensive now. I mean, beyond doubt, the one simple word is that they are expensive. And I mean, yes, they are terrific companies. They will do very well in the future. And you may get 10, 12%, 15% kind of return. If that makes you happy, obviously. But people want to make at least 20-25% here. So I think you have to maybe find the consumption companies which are not that heavily priced for the growth, what the underlying growth is. But some of these stocks, say like Nestle, I mean, which is the company in consumer space. Now that company is declared 100 rupees EPS last year and expected to be about 120, 123 rupees current year. I mean, hit the high of 5,000 and now it's about 4,600, 4,700. So 37, 38 P multiple or maybe even 40 P for 2012-13 looks to be pretty pricey.
Let's talk about telecom. Again, there you have one Bharti Airtel you've always been very fond of. But the kind of headwinds we've seen with these new regulations, which side are you on? The TRAI feels that, it's not all gloom, it's a 4 paise additional cost on you, but the industry seems to believe that, you've sounded a death knell on us. What's your own sense?
You see, to take any call before something is final is, I mean...
Oh, the TRAI
so,
final.
No, it's not final.
I don't agree, may disagree, but it's very unlikely.
Is that final?
The TRAI norm is final. The TRAI recommendation is final.
So I may not, I'm not on...
And the government may still have the option.
But it's still not, it is kind of final word, go. So, once we see what is the final draft, because a lot is happening, yesterday only I think Telecom Secretary has changed. Does it mean anything new for the regulations and all? But I mean, let's take that whatever has been recommended is the final. Then what it does, I mean, to best of my understanding, is that of course it makes the telecom much more expensive than what it is today for the consumers. Second is, I think the more important thing is that the competition, there will be a natural consolidation. It is not going to the game of some 10, 12 guys. It will be a game of at best 4 or 5 guys, those who have current revenues. Because what it is doing is that it is saying that we will upfront the spectrum cost and we will charge the spectrum cost irrespective of your size. So if you are a 40,000 crore company, then also you pay 20,000 crores, and if you are a 10,000 crore company, then also you pay 20,000 crores. Earlier it was variable. So that's the fundamental shift in the thinking. So what it does is that it makes it gives lot of premium to the guys who have the large revenue base and well running show. So the largest guy like Bharti and number 2 Vodafone, 30-40,000 crores kind of revenue, they get a head start in terms of what will be the pricing power they will have. Because in any case, this is not an industry which will kind of shrink in size. We are used to now talking. It's well connected. Still the network has become bigger. So I don't think...
It will seriously put a strain on their balance sheets.
Yes, I mean, if nothing else changes, but I think it is not going to be like that. If government is changing the pricing of the spectrum, companies will change the pricing of the minutes. And that is possible only when the competition is rational. And fortunately or unintendedly, this so-called policy is making the entire industry rational.
So you could see consolidation coming back.
It is, I mean, if it is, I think so.
Let's go to banking, financials. Again, everybody I spoke to through the beginning of this year said with the interest rate cycle turning, interest rate sensitives are our best bet, banks are our best bet.
It's too early, I think.
It's too early, you believe?
Yeah, I think so. I think I mean, peak of the rate cycle clearly is the worst sign, and the reversal we think is that if reversal happens, the first cut comes, we think that everything will start greening up, from the brown patch. It doesn't happen like that. First 6-8 months or 9 months, 1 year is a very sharp downswing. And to arrest that, authorities come and throw more and more rate cuts. That's how because they have only in the name of interest rate, they have accelerator and brake. So now they have stopped applying brake. Now they want to accelerate the economy. So they will go from 8.5 to 8. Then they'll find that growth rate is now below 5. They'll say 100 bips cut. So I think we are going to see more rate cuts.
And falling growth.
And falling growth.
Sharp falling growth.
Yeah, sharp falling growth. So credit demand will be lower. Quality of assets will further deteriorate because corporates are now really, breathless, so to say. I mean, you can see if you see around here, there are so many towers under construction and none of them have activity. It's come to standstill. Large towers, 50 stories, 60 stories down. All of them have significantly slowed down or actually they have stopped the work.
Okay.
So the issue is that cost of money is so high and this economy, I mean, these are all for the offices and all. So new offices cannot afford this kind of structure. Globally, the interest rate is 0. Here we have 15, 17, 18% kind of. How do you compete?
And you're optimistic because you see an opportunity in the fact that things will soon get even worse, and when they get worse, it's probably the best time to buy. Is that your simple way of looking at it?
What I'm saying is that, see, buying and selling is function of what you understand and what is throwing you opportunity. Because markets throw you opportunities, So, in these kind of times, people become very emotionally surcharged and they decide to sell, say, 5% of a company. Then suddenly, if somebody, say, Asian Paint is today 3,700. Tomorrow, some FI thinks, who is holding, say, 5% of the company, thinks that, boss, I'm not happy with this country is a basket case, and goes and hammers the whole thing down to, say, 21, 2,200. It's a terrific opportunity. The same company, you get it 30, 40% cheaper. So you have to keep waiting for those kind of opportunities. And these markets are going to throw those kind of opportunities. Say HDFC Bank, I saw some sell-off in last 2-3 days. From 550, it came down to 500 rupees. Maybe the sell-off is continuing and it can come down to, say, 450 or something like that. But I love the bank.
And you're saying fundamentally, things are only going to get better for the bank. As the economy improves or as
bank has terrific positioning. Improves. They are the best bank. They still have 3-4% market share, which, I mean, since it is the best bank with the best brand, best top management, team, they should get the highest market share of the business, which is far, far away. For next 15 years also, if they keep growing at 25%, they'll not be the largest bank.
Let me just sum up this discussion. What I hear you saying is, Raamdeo, that there are going to be tough times ahead.
Yeah.
We will see impairments in balance sheets because of the factors we are in. We are going to see a lot of negative news flow coming in.
Yeah.
But you believe that fundamentally, a lot of these good companies are likely to bounce back or will bounce back when things get better. Push to the wall, regulators, government will have to act. And therefore, there would be value right now in picking up some of these stocks.
Yeah, I mean, see, the curse of leverage will play out its full fury in the next 3, 4, 5 quarters. The leverage whosoever has taken, and if it is irrational at irrational cost, they are going to really have a bad time. And combined with that, so-called government lethargy or government inaction or whatever has happened to the power sector and those kind of things. So those will further compound the problem. In a leverage balance sheet, if you have a government inaction or irrational government action, then you have a double whammy. So with those kind of, but despite that, you have other side of the market where you have consumer stocks, you have businesses which are not that impacted by whatever is happening to the government in Delhi. I think you are very fine.
You need a strong heart over the next few months. Because you're going to see a lot of flame outs. Is that the point you're making?
That's where I think experience comes to play. I mean, we are there in the market for 20 years. We have seen 90s markets post Harsha Mehta, markets post dot-com bust. This is market post Lehman collapse. So you have to, I mean, this narrow phase, it may last 6 months, it may last 1 year. My sense is that next 6 months is going to be very tough in terms of headlines, but don't bother about headlines, focus on the stocks.
It's always a pleasure talking to you, Raamdeo. Thank you so much for coming across. That was Raamdeo Agrawal here on Market Guru. Take a quick break, but lots more coming up on Bloomberg UTV.